In this video, I'm going to explain value, value creation, value capture, and why understanding value is so fundamental to business. Hi, my name is Andrew, and welcome to another podcast episode in the series, Andrew Talks Business, where I go over the basic business fundamentals that you need to know to understand business, but in a more conversational manner. Now, value is so important because as a consumer, we're kind of penny pinched in this economy. For some, that means that they can spend tens of thousands of dollars on Taylor Swift tickets. But for others, that means that value is spending that $1 on a McDonald's ice cream cone. So value looks different to each consumer. But essentially, what value is understanding that when you sell a product or service, value is the benefit that consumers get when they purchase your product. Value kind of explains why companies grow, why some fail, and how if you don't create value or capture value, your business is not likely to grow. It's the prospects, the benefits over the costs that you deliver to your consumers. If you sell a pizza for $50, not many consumers are going to buy it if they don't think it's worth it. But all of a sudden, you put things like caviar, smoked salmon, all different types of, very expensive meat. Then $50 is worth it. So understanding value is so important to a business. In short, when you talk about value, think about value in the eyes of the consumer. When they buy a product, is it worth it? Why would somebody buy a product? Value can come in a variety of different forms, like solving a problem, saving time, convenience, lower cost, higher quality, social status, and emotional benefits, or even a better experience. For some, business class is too expensive, but for others, business class is great value because it allows them to have a more luxurious experience on a plane. As I talked about in my other video, my first video, understanding your target market is very important. So when you deliver a product or service to said target market, you have to understand what they value. If you are delivering a airplane service to a budget-friendly, conscious consumer, at a high price point, it's not going to be worth it because they just want a economy experience at an economy price. All of a sudden, if you deliver something that doesn't match their expectations, or if you deliver something that they just simply don't want, it's going to be wasted resources and money. It's why Apple can charge $1,000 or $2,000 a phone because they're not just paying for the parts or the software. You're paying because Apple is a higher end product, targeted to the medium high income consumer because it's the status symbol. If you have an Apple iPhone, it means that you're doing pretty well and it's kind of like conspicuous consumption to an extent if you're paying thousands of dollars for a phone. Now let's talk about two different aspects of value because we have value creation and value capture. So value creation is identifying a problem and selling a product or service that's targeted towards the problems that consumers face. For example, let's say you're in an office and you don't want to drink tap water and sparkling water is too expensive. So you have a water filter. It solves the problem of unsafe or bad tasting tap water. Noise canceling headphones solves the problem of distractions. And let's say you don't know how to file your own taxes or the process is a little cumbersome. Now, some people would rather just file their own taxes and do everything themselves, but some people would just say, I don't want to risk any tax deductions or credits, or I don't want to miss any, kind of receipts, or I might just do it wrong. So I'm just going to bring it to an accountant. You pay money, and the service they provide, the benefits outweighs the cost of going to the accountant. So let's say an income tax return is $100 to $200. The value of that income tax return is more than what you paid for because all of those tax deductions and credits and the time saved if you don't have to file for tax outweighs the cost that you go to the accountant with, which is $100 or $200 for your income tax return. If you think about it like an average consumer going to the mall, you see a bunch of stores offering different products and services. The price point that you pay for, which is the cost, and you think about the benefits that you get, would exceed the cost, which is why you go to the movies. Even though the movie tickets are $15, $20, the benefits that you get from going to the movie, which is like, Marvel, The Avengers, or Zootopia 2, outweighs the cost. So if you think about cost benefit analysis when you buy a car, when you purchase anything as a consumer, you have to think about the value that you get and the cost that you incur to receive those benefits. As a business, if you're able to not only provide functional but emotional benefits when selling a product or service, all the better. Tesla does this pretty well because they sell electric cars. It's not only a lifestyle, but you save a lot of money going to, charge your EV car rather than going to the gas pump, which has increased over the last few years. So all of those benefits, if you think about the person that purchases a Tesla car, the benefits, the functional and emotional benefits outweighs the cost of buying a Tesla car, which may include things like self-driving. Maybe people don't like driving. And on the highway, when you set the self-driving mode, it can save a lot of time, energy, resources. So all of those, that bundle of package of benefits combined outweighs the cost, which is the whole purpose of today's video. If you as a business or an entrepreneur or proprietor are able to identify the specified benefits of your target market and then set it at a price point that makes sense, that's what makes a successful business. Back then, when Uber started out, they had a very low price point and entry point, because they wanted to get a lot of people on the app. So people were going on Uber for, $5, $10. It was super cheap. But as costs of the company grew, they had to increase the price point at to which it might even be the same as taxis in some areas. So some people eventually stopped using the app because the cost was exceeding the benefits that the consumers would get from using Uber. So you have to really identify the benefits of your consumer that they want and deliver an exceptional product or service and at a price point that makes sense. If you're charging $100 for a taxi or an Uber ride, consumers are going to look for alternatives. Value creation is important because if a company doesn't create value, they don't give a reason for their consumers to go to their business. And customers would go elsewhere. They're going to go to a place which is better value. In many cases in this economy, people are concerned about price. So they're going to look for the best benefits over price and benefits in terms of whether it's service, whether it's how they're treated, rewards, the taste, the quality. So there's a lot of different factors in that cost benefit analysis. I like to talk about Starbucks in my class because Starbucks represents an interesting case of value. Starbucks used to be a place where people can meet up, grab a drink, a cozy atmosphere, unique customizable drinks, an app that allows you to accumulate rewards. At one point, Starbucks was one of the biggest and continues to be the biggest coffee chain. But recently, they've made a few missteps, which kind of people have shifted their motivations and interests to other companies because there's a lot of competition now in the coffee market. Starbucks right now is really pricing themselves out of the market when there are so many other competitors offering comparable coffee and they haven't really kept to their value proposition. They've turned themselves into drive-through, fast serve coffee, order through the app, get your coffee and leave. But now the CEO is trying to pivot back to their original value proposition, which was a cozy atmosphere where people could go, free Wi-Fi, and a place and a comfortable place where people can meet and work. That was their original value proposition, which was those benefits. But now they're kind of turning themselves into a more corporate environment, lots of drive-through, and the prices have gone up. So a lot that coupled along with the boycotts due to things like unions or political issues, Starbucks revenues have dropped in the past few years, especially in the Chinese market when there's so many other competitors like Luckin Coffee and Coffee Coffee. Value creation is the why customers will buy from the business, why consumers will choose the business. In many cases, customer loyalty has been created because the value created by the business and their promise to the consumers has been consistent. The food quality is the same, prices have remained relatively stable, and it's a good experience and product every single time. Do you know any companies that have been consistent in their value creation? Let me know in the comments below. Now, let's talk about value capture because a company can create all of those benefits, but if they don't find a way to monetize and receive some sort of money from their investment in those benefits, they're going to go bankrupt because value capture occurs when businesses are able to charge a price higher than the cost it takes them to produce. So let me explain. If a pizza to a pizzeria, all of the product, labor, and rent, let's say on average the slice of pizza costs $1.50 to $2. Now, if you go to New York, you have some $1 slice pizzas, and they're able to do that through economies of scale. Well, let's say on average, given the high rent, a slice of pizza costs about $2 to make. Now, if you're selling that pizza for $5, congrats, you found ways to capture value. And each slice of pizza that you sell, you're making $3 profit per pizza. So, because of your marketing, because of your consistency, you're able to capture value, and that each sale is generating enough profit to keep you in business. That difference is also called margin. So it's the difference between what you're selling and the cost to your consumers. You also have to think about an ideal cost and the price you charge to the consumer, which is why I'm going to talk very shortly in the upcoming videos about market price and that how businesses want to charge a high price. Consumers want a low price for the product. So you have to agree on some ideal price which makes sense for the business and the consumer. Obviously, a random individual, the average consumer for pizza, maybe middle income, is not going to spend $10 on a slice of pizza. That's too much. The average person or business, let's say proprietor, is not going to sell a slice of pizza at $1. It's very unsustainable and it's hard to make profits. So they're going to agree on some equilibrium price where there's value to the consumer and there's value to the business. Towards the business, that value side is called value capture. Towards the consumer, it's called value creation. So let's say on average, the slice of pizza costs $5. To the consumer, that $5 is their cost. They get way more benefit, whether it's hunger, nutrition, the emotional benefits. It's way higher than $5. So the economic value is higher than $5. They are very happy and willing to buy that pizza for $5 a slice because they would have to buy all the ingredients and make it at home, or maybe they're in a rush. So they think that that's a great price. Now, for the business, they charge $5 for that pizza. Let's say the cost to make it is $2. Each slice, they make $3 profit. They are very happy to do it. That's a price point that makes sense. They will continue to do that because they get profits. It's not a price that, let's say they charge $8 and they only get 10 customers through the door and nobody wants to buy an $8 slice of pizza. This is something that a lot of students and entrepreneurs don't really understand because a company might create a great product, an amazing product, but you have to ensure that the price makes sense for the business. Let's say, for example, at the cost of $2, you sell the pizza slice for $1. Every slice of pizza loses money. All that effort to make the pizza, every slice loses money. So if you think about that for a second, every slice loses money. Why would you still be in business? If you can't capture enough value, you're going to close down or go bankrupt very soon. Another example is a restaurant with great food but a terrible pricing strategy. So they're not able to capture value. A startup that gives away a lot of free items, but they can't find a sustainable revenue model, or a subscription service that has a high cost, but not a lot of ways to maintain their user base. A lot of people just get the free stuff and then leave. Can you think of some other companies that have been able to capture value? Some of the popular ones include Amazon. You think of Costco because people continue to use their products. The companies that are able to capture value are the ones that set it at a good price, and there's a lot of functional and emotional benefits that come from using the products. It's not enough just to create value, and it's not enough just to capture it. Successful companies think about their branding and what they sell, and think about the products and services that they offer. Does it match the target market's needs? Does it match their expectations? And let's think about a price point that makes sense. So balance is critical. As I mentioned in the pizzeria example, if the pizza slice is too high, there are other competitors and people and consumers will go elsewhere. If the price is too low, you're wasting all the time, money, and resources that can be better spent because you can charge a higher price and that your efforts are actually going to be worth it. You're not losing money with every pizza slice you sell. So it's essential for businesses to really create a unique product or service with a good value proposition, understand what customers value, and create value, but also capture value. Things are best done in a balance. So, as a quick conclusion, a few things. Value is the benefit that a product gives to consumers, and value creation is about solving needs, wants, and problems for your customers. And value capture is how businesses are able to monetize the value that they create for their customers. Successful companies sell a good product or service at a price point that makes sense for their consumers. Thanks for watching today's video on value creation, capture, and why value is so important to a business. Be sure to like, share, subscribe to this video, and I'll see you in the next podcast video.